Hey, good afternoon, ladies and gentlemen. Welcome to the first weekly market review for June, the 2nd of June. So today I have with me Gerald. How are you, Gerald?
Been good. So I think we have come to the end of the earnings season in both US and Singapore. More time to pause and reflect around what is going on in the markets. But at the same time, the news around the US trade tariffs has not actually died down. In fact, we have seen quite a lot of news flow relating to the tariffs in the past week. So I want to be sharing some of these updates with our viewers today, so that we can keep ourselves abreast of the market.
Yes, indeed. So we actually capped off the last week of May, and then for the whole month, I think most of the indices performed quite well. One of the strongest months in the past 1 or 2 years. So later I'll go through that in the technical charts. Nvidia results was slightly above analyst expectation, so that was a positive thing. But then we have the U.S. International Court striking down the tariff that Trump have placed on Liberation Day. But then the following day, we have the U.S. Court of Appeal Court sort of allowing a stay of that judgment. So tariff is still ongoing, and we are still counting down to the 9th of July deadline. And nearer to the weekend, we got the 50% steel tariff that Trump was saying that he will enact this week. So market is still choppy, and we will let Gerald take us through some of the key developments first.
Sure. Before we start, some disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can go to this website, sias.org.sg/membership, or scan the QR code. And as a SIAS member, you can access various online resources as well as investor education programs. So, like Sunny mentioned earlier, we saw the markets performing fairly well in May. In the last week, we saw continued gains for both the S&P 500 as well as the STI. So for the S&P 500, a 1.9% gain to above the 5,900 levels. So not too far away from the all-time highs of 6,100 points. And then the STI now back to about 3,900 points, also not too far away from the all-time high of about 4,000 points. So one of the key developments in the past week is really this uncertainty on the trade policy. Just in the past week alone, we have seen various news flow around the trade policy, starting with the positive news at the start of the week, where US President Donald Trump postponed the planned 50% tariff on EU imports. Okay, then subsequently, more positive news in that the US Court of International Trade actually blocked most of the recently introduced tariffs, but this was actually struck down. So that is something that we continue to keep a lookout for as the legal challenges continue. Later in the week is when some of the more negative news actually started coming through. We have the US Treasury Secretary actually stating that the US-China trade negotiations have somewhat stalled. Okay, then we also saw more news flow towards the end of the week, where the US will double tariffs on steel and aluminium imports from 25% to 50% starting Wednesday. Okay, so we'll continue to keep a lookout to see whether these tariffs really do come in. And if that is the case, then it would mean that some of these tariff concerns would still be at the forefront of investor concerns. In terms of the economic data, the key economic data past week was the US PCE price index data. This is the Fed's default reference towards inflation. And we see here that inflation has eased fairly significantly to just 0.1% in the month of April from 0.5% in the month of February. So that is positive news to indicate that despite all the tariff fears, inflation has actually still been fairly moderate. So at the same time, we have seen some easing of the US bond yields. This was an issue in the past week, but in the previous week, we saw that the US 10-year government bond yield came down to 4.4% from 4.6% the week before. And this is actually positive for sentiment towards stocks because the concern was that if the bond yields continue to go up, that may actually lead to higher borrowing cost as well as the swap of assets from equities towards bonds. In terms of the top performers for the STI, we saw ST Engineering and SETS doing well. We also saw some of the REITs having some rebound with the fall in the bond yields. So Mapletree Logistics Trust up by 2.8%, CapitaLand Ascendas REIT up by 2.3% after it announced an acquisition. So I'll share more about CapitaLand Ascendas REIT in today's weekly market review as well. In terms of the worst performers, some of the Jardine related names here. We have got Jardine Cycle and Carriage down by 5.5%, Hong Kong Land down by 1.9%, and Jardine Matheson down by 1.2%. Okay, so CapitaLand Ascendas REIT, I saw earlier that it was one of the top gainers in the past week. So we see that it's now back to about $2.65 per share. After coming down with the announcement of the trade tariffs, we have actually seen a fair bit of rebound for CapitaLand Ascendas REIT's share price. So what the company announced would be the acquisition of two assets in Singapore, 9 Tai Seng Drive as well as 5 Science Park Drive. Okay, so 9 Tai Seng Drive is a data center asset, and 5 Science Park Drive is a business space. And both would actually increase the exposure of CapitaLand Ascendas REIT in the Singapore market. Okay, so first and foremost, we see 9 Tai Seng Drive. The acquisition cost for this asset is at about 464 million. The land tenure is for 30 years and it will expire in 31st May 2055. And the occupancy rate of this asset is at about 100% with a weighted average lease expiry of 4.4 years. So I think with this asset, we see CapitaLand Ascendas REIT increasing its exposure towards data center assets in the Singapore market. It's got a good occupancy rate as well as visibility towards the leases, given the weighted average lease expiry of 4.4 years. Okay, so in terms of the rationale of the acquisition, some of the rationale that was given by the REIT manager is that this will solidify its footprint in Singapore. It will enhance the quality of its portfolio, provide the stable income stream from established tenants, and the acquisition is expected to be accretive to its distribution per unit. Okay, so first and foremost, in terms of increasing the exposure towards Singapore, we see that in terms of the portfolio asset value, with the acquisition, CapitaLand Ascendas REIT will increase its portfolio asset value from 16.9 billion to 17.6 billion. Okay, and in terms of the percentage exposure to Singapore, it will increase from 65% to 67%. So of this 17.6 billion, we've got about 11.7 billion of assets that will then come through from Singapore, with the remaining assets from Australia, US, as well as in UK, Europe. So for investors who like REITs with significant Singapore exposure, this is good news because of the fact that CapitaLand Ascendas REIT would then have about 2/3 of its portfolio in the Singapore market. We also see that with the acquisition of the data center asset in Singapore, CapitaLand Ascendas REIT total data center asset value will increase from 1.4 billion to 1.9 billion. And of this 1.9 billion, once again, about 1 billion would be data center assets in Singapore, which means that more than half of CapitaLand Ascendas REIT data center exposure will be in the Singapore market. Okay, so in terms of the occupancy for both assets, earlier I shared the occupancy rate for 9 Tai Seng Drive, so 100% occupancy rate. And effectively for this asset, it is committed by well-established end users in the digital, e-commerce, and financial services space. Next, we've got 5 Science Park Drive. For those of you who stay in the west or drive frequently down AYE, you might have noticed this asset. Effectively, it is occupied by Shopee, which is one of the largest e-commerce platforms in Southeast Asia as well as in Taiwan. So with this, effectively CapitaLand Ascendas REIT would also increase its exposure towards the e-commerce sector, given that this is being used by Shopee as its regional headquarters. Okay, so I mentioned earlier that the acquisition is expected to be accretive to CapitaLand Ascendas REIT distribution per unit. For 9 Tai Seng Drive, it is expected to be accretive by about 1.2%. For 5 Science Park Drive, that is expected to be accretive by about 0.14%. So after the 2 transactions are completed, the expected accretion is expected to be about 1.4%. So apart from the initially announced accretion to the distribution per unit, the REIT manager believes that both assets present potential organic growth potential as well, which can help to further uplift the distribution per unit. So if we start from first 9 Tai Seng Drive, which is the data center asset, so what we see here is that in terms of the retail rents, what they are currently getting is about 30% below the current market rate. So as some of these leases are renewed, there is scope for improvement in terms of the rental income. This is driven by the very tight vacancy rate of about 2%, as well as supply constraints in the Singapore market. At the same time, there's potential for capacity expansion at this data center asset as well. And if this comes true, that presents further potential for growth in the distribution per unit. Okay, and this is likewise what the REIT manager sees for 5 Science Park Drive. Once again, the current rate is about 15% below the potential rents that they believe the asset can actually generate. And at the same time, the existing lease has remaining term of about 1.5 years. So when these leases are potentially renewed, there's scope to improve the rental income. Okay, so if I were to look at the valuation of CapitaLand Ascendas REIT at this point in time, I mentioned earlier that the share price has recovered after the tariff sell down. So currently at about 1.16 times price to book, which is above the historical average. Okay, in terms of the expected dividend yield at about 5.7%, which is in line with the historical average of CapitaLand Ascendas REIT. Okay, so in terms of what to look out for, this is the start of a new month. So we have a new Singapore savings bond that is available for application. We have the 6-month Singapore T-bill auction on the 5th of June, Thursday. And I mentioned CapitaLand Ascendas REIT earlier, it will go ex-dividend on the 4th of June. Last but not least, in terms of the economic data, we will look out for the US non-farm payroll data that's coming out on Friday, the 6th of June, for us to understand the health of the US economy. Okay, so with that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks Gerald for that update on CapitaLand Ascendas REIT. So it is good to know that it's a DPU accretive. So those of you who are investing or those of you who do yield investing with the yield coming down, the REIT sector or CapitaLand Ascendas REIT can be one of the counters that you will be looking at. Okay, so today is the start of a new month, as Gerald mentioned. So we will recap what happened in May. So you can see that the STI in the period of May, which I have highlighted out, is up about 1.8% only. Not as big as the jump in what we see in the US market, but then nonetheless, Singapore is still a very steady stock market to look at. So not a lot of big movement on the STI index. So if you're asking me where would be the STI heading, so let me just hide this. Okay, so that would likely be the STI heading. Firstly, we have a resistance level around this high on the 13th of May, which is around the 3,949 points or 3,950 points level. That will be the first resistance that we are looking at, and we are about 60 points away from that level, from the high of 13th of May. And if we break above this level, then definitely the next high will be the all-time high that we look at, the 4,500 points. On the support side, we are looking at the 50 days and 100 days finding confluence with the lower bound of the Bollinger Band, hence around the 3,850, 3,847 points. That would come in as a very strong support for the STI index going forward. So even if you look at a range bound formation on the STI index with the support around 3850 and the resistance around 3950, that could be a 100-point movement for the month of June. Okay, so with all the you can see that with all the moving averages sort of starting to trend up, it could mean that we could be on a slow recovery or uptrend towards the all-time high since the tariff was announced in the later part of in the early part of April. So looking at the MACD indicator, we can see that the tariff recovery is sort of coming to an end or a pause for now. We have the first negative reading for today at least on the 2nd of June, but then it's not conclusive yet. But looking at the trajectory of the MACD indicator in the past 1 or 2 weeks or so, I would say it is not telling us it is having any trajectory or any direction going forward. Hence, most likely suggesting that we are likely going to be in a range bound formation between the 3850 and the 3950 range for the near term. On the RSI indicator, you can see that the latest reading around 56 has come down from the peak reading as of last Thursday of 63. So any sort of healthy momentum is sort of negated last Friday and today, and we are trending close to the 50-point neutral mark. Even though we are still up by about 5 or 6 points above the 50-point neutral mark, that also signifies that any momentum or trend reading in the RSI indicator is weak for now. So my best estimation looking at where the STI heading will be a 100-point range between the 3850 to the 3950 in the next few weeks. Next, let me move to the US indices. Okay, so let me start with the Dow Jones Index. We are up about close to 4% for the month of May. So this is a positive sign because this is one of the biggest positive month we have seen since November 2023. And let me just hide this reading first. Looking at the Dow Jones Index, we are still capped below the 200 days moving average, which is at 42,406 points. So that is the critical resistance level that we are looking at. And we are also near this level of 100 days moving average. So we are at a key point of a pivot of resistance level over here on the Dow Jones Index. On the support side for the Dow Jones Index, looking at the moving averages, you have the 50 days MA coming to find some confluence with the lower bound of the Bollinger Band at 40,795 points, with the 50 days MA at 41,080 points. So the 41,000 would be a strong handle for the Dow Jones Index over here, and that will be the key level to watch. And then on the resistance level, we can see that the previous high that we saw over here, okay, which is on the 26th of March. So this high over here, this level around the 42,759 points would be the first resistance level that we will see. And then up above that, we have the upper bound of the Bollinger Band at 43,044 points. So Dow Jones Index movement for the month of June likely to be around the 41,000 handle to the 43,000 handle, and we are right in the middle, about 42,270 points right now. The MACD has sort of turned negative in the past 2 trading sessions, Thursday, Friday, and even sort of Wednesday. So that means that the recovery from the tariff announcements was likely coming to an end, and most likely have been priced in as of now. So that is, I think that we are waiting for new catalysts on some of the trade negotiation between US and China to come through this week to see where the direction is likely going to be headed. On the RSI, the reading at 56, similar to the STI, is not very strong, hence likely suggesting we are likely going to see a sideways movement on the Dow Jones Index, or even just a very slight positive uptrend. But all that is not going to sort of negate what is the trade news that's going to come up and what the non-farm payroll numbers that could be the catalyst for the next move on the US major indices. Okay, so next let us move to the S&P 500. S&P 500 did slightly better than the Dow Jones Index for the month of May. We are up about 6% in the period of May, so that is a good sign of recovery. But there are also markets speaking that the rebound that we've seen so far, which is above the 2nd of April Liberation Day announcement, we have gone above that. That could mean that market is already pricing in a best case scenario on the trade negotiation, which could still swing either way. So hence, we will still need to take some precaution going forward. Hence, on the S&P 500 index, we have that lower bound of the Bollinger Band with the 50 days moving average finding confluence around the 5,600 points level. Okay, and the resistance level now with the one inside, that would be the upper bound of the Bollinger Band at 6,059 points, and then the year to date high around 6,144 points. Okay, so these are the key levels to watch on the S&P 500, 5,600, with the resistance, immediate resistance coming in around the 6,000 handle, I would say. Okay, so 400 points of likely movement that we are going to see. MACD is not giving us any indicators, slightly negative. That means that we have priced in more of the recovery. And RSI at a 60-point level, I would still say is quite healthy on the S&P 500 index. So that means that S&P 500 could have slightly more momentum in moving upwards. Should we have some kind of a positive news coming in from the trade negotiation or the non-farm payroll data coming up on Friday. Next, on the NASDAQ Composite Index, which was the best performer among the 3 US indices in the month of May, is up about 9%, 9.56%. So that is the biggest recovery that we have seen among the 3 US indices. Okay, so where are we likely going to head? We have crossed above the major 200 days moving average we have been talking about in the past few weeks. So that means that for the S&P 500 and the NASDAQ Composite Index, at least, which are both what we call the risk asset, though, we track all the major stocks, they have crossed above the 200 days moving average, meaning that we have sort of reached above a very major resistance level in the month of May, and hence that could become a support level going forward for the major indices as well. Okay, but there is a support level for the NASDAQ Composite definitely is coming in around the 17,500 or 600 point level, which is the 50 days and the lower bound of the Bollinger Band, with the resistance level, the upper bound of the Bollinger Band at 19,826 points. Indicators reading, MACD is neutral, slightly negative. RSI still has a very strong reading at 62, although it came down from the overbought level last Friday of the 70-point level. So we still have some kind of a strong momentum now on the RSI index, and that could mean that the rebound on the NASDAQ Composite Index could be stronger compared to the other 3 US indices. Okay. So as usual, as promised last week, let's have a look at the Nvidia earnings. Not really earnings, but the tech movement, the technical charts movement. Okay, so we got the earnings last week on 28th of May, which the earnings per share and the revenue provided some kind of a positive surprise above analyst expectation. So during the results, you can see the Nvidia share price actually jumped up quite a bit, about 3%. But then after that, the next day, it was sold down for another 3% as well. Okay, so this observation was the market have already sold on news that they bought on the expectation that earnings is still going to be solid and perform well going into the 28th May announcement. But then after that news came out, then market actually took profit and sell off to that. But what is the interesting thing I have seen on the Nvidia chart is you can see here we sort of likely may have a formation of a inverted head and shoulder formation with the head over here. This is the neckline that we will say, and then you can see the shoulder over here. So if let's say Nvidia share price were to come back down to the 50 days moving average or the Bollinger Band lower bound were to converge upwards, then around the 113 point level, that could create a very strong support for Nvidia share price, and then rebound back to the this high over here, which now form a double top formation on the high of 18 Feb and 2nd of June at around the 143 points level. So Nvidia could actually move around this zone, and if let's say we have the confirmation of the next shoulder, right, the right shoulder, then definitely that could come in as a very strong support here, and then it could also mean a quite good rebound on the Nvidia share price for the next half of the year as well. Okay, so on my take on the earnings, I would say that there are some worries about the chip restriction of Nvidia sales to the Chinese market, as Jensen Huang has spoken earlier. Before the results, he said that the chip bans from US has actually made Nvidia lost a very significant market that they can sell to. But then that was the worry that we thought that we would see in the results that came out on 28 May, but that proved to be not yet impacting the Nvidia sort of sales performance yet. So market took that as a relief as well. Hence, Nvidia performed quite well after the earnings, and you can see that the indicators wise, MACD still is negative right now, but on the build up towards the earnings, it was actually on the uptrend. So now we are seeing that Nvidia may have peaked in the near term. You can see a crossover of the MACD line below the signal line is likely happening. That could signal a change in direction, and hence foreseeing that Nvidia share price is likely going to sort of a pullback further, a technical pullback towards at least the 200 days moving average at 126, and then further support coming in the 50 days at moving average at 116 with the previous shoulder at 113. On the RSI, we have also came down from the peak of 73 point overbought reading to last Friday reading of 63. So likely we would want to prefer, if let's say a pullback happen, wait for it to at least go to the 50-point neutral mark. Then we monitor to see where is Nvidia share price again before looking for an entry sign on the Nvidia stock in the near term. Okay, so that is my take on the indices roundup as well as Nvidia share price performance after their earnings results. Anything else that we should look out for, Gerald?
I think in terms of what to look out for is definitely the non-farm payroll data. Like I mentioned earlier, that is the first economic data for this month, and it will give us an indication around the health of the US economy. So we'll keep a lookout for that, and we hope to be able to update you in next week's weekly market review.
Yes, agree on that. That will give us the latest reading on how nervous the US job market and employment market hiring is. Companies are worrying about the tariff or the flip-flop in tariff news will cause them to sort of scale back on employment. So that will give us a very good reading. So we hope to update you in the next weekly market review. So do stay tuned to our weekly market review every Monday, and we will keep you updated. So for now, goodbye and have a good trading week.
Thank you.
Thank you.